Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video for Thursday, July the 8th. It is 4:14 p.m. Eastern time here in Jacksonville, Florida, about 15 minutes after market close. And as you can see, lots of red on the left-hand side of your screen there under the what just happened in performance. A bit of a rough day in the market, but in today's video, we're actually going to talk about some indicators / actionable ways you can identify strength on down days such as today in particular stocks, sectors, etc. Additionally, we're going to run over a handful of trades that we made today, most of those being buys, but one sell, actually two sells, as well as just some other leadership that we took note of today and significant weakness. So let's get right into it, everybody. What just happened? Rates fall. We saw the treasury yields fall pretty significantly overnight and into this morning, and maybe a little bit of shift in the way that the markets and growth stocks reacted to that. We'll talk about that and look at those charts here in just a little bit. More COVID news. We had Japan declare a state of emergency, some information regarding the efficacy of some of the vaccines for coronavirus and how those are holding up now with this new variant. That kind of spooked the markets, and so all of that equates to stocks pulled back. It was pretty ugly this morning at the open, and especially pre-market. Particularly growth stocks and tech stocks were down pretty significantly early this morning, and we'll see how that shaped up. Most of those ended up rebounding, a few didn't, but we'll get into those charts here in a moment. The performance, S&P down 0.85%, Qs down 0.6%, Dow down 0.76%. Mid caps down 1.28, Russell 2000 down 0.94. There is no change to the market state. It remains in an uptrend. You see the red QQQ up there. That is strictly because the Qs are extended, still sitting about 6% above the 50, which is an area where you really want to be cautious just in regards to how much leverage you use and how much exposure you have. You just want to be cautious with the tech and growth stocks as the Qs are that extended, but they held up well today. We're going to look at that in just a moment. Market leaders remains the same. If you turn your attention to the trend gauge, short and medium term do have a slight change. You can see that little small yellow arrow right here where my mouse is has been moved from right around here to the neutral, directly under neutral, and that is because small caps and mid caps really aren't looking very good. Both of those are below the 50 and the 21. They were weak today. You can see the QQQ stop sign remains here. That's for the same reason that I just mentioned, just a little bit extended off of the 50-day from a historical perspective, or even just the last 12 to 18 months perspective. Long term remains in a bullish uptrend above the 200. We are above the 200 on all major indices. So before we get to the charts, this is the team at Revere. This is me in the middle, Hunter Mozingo. If you have any questions for me, and I've got a few of you guys that have reached out over the last couple of videos asking some really awesome questions. Hopefully my answers were sufficient and detailed, but please send me any questions you have or comments on anything I cover in the video. You can also reach out to any of these guys, Dan, Tim, Alex, or Don at revereasset.com. And that could be if you have questions for them as individuals, or if you're interested in learning more about Revere and what it is that we do here at Revere, what our strategy is. So like I said, feel free to reach out, call, send an email. This is our phone number, 855-732-5932. So let's get to the charts here. S&P 500, SPY, almost touched the 21, got really, really close early this morning, but held up and actually got back above the 8-day by the end of the day. By the close here, you can see the close right at 431. 1% above the 21, 2.5%, 2.4% above the 50. The S&P is not extended. The Dow is not extended. The Russell 2000, the mid caps, they're not extended. They actually look pretty bad. The Qs are really the only index that has given us cause for concern, just in the fact that it's been on a really good run and it is extended. But pretty constructive action here from the S&P. Didn't even touch the 21-day exponential and then got back above the 8-day exponential. Following a really crappy morning and bad open, that's really all you can ask for. And the Qs, like I mentioned, about 6% above the 50-day, 2.5 above the 21, but really relentless strength here. I mean, this was the weakest this morning, and ultimately ended up out of the 5 indices closing the least down, 0.6%, back above the 8-day exponential moving average. And I'll show you this on a 5-minute as well. You can see, and myself, Don, and Alex were talking about this really 30, 40 minutes ago, that 358 was the battleground today. It was kind of trapped here early this morning in this 355 to 357 range, finally got through there, ran into resistance at 358 around lunchtime, around 12 o'clock, and ultimately was able to push through that and stay above it, even though it broke it a few times into the close, ultimately closed above that 358 level here on the Qs. And the Dow, which got a little bit of a boost from a positive announcement on Boeing, closing just a tiny little bit above the 21 and the 50. Industrials slash metals and mining slash banks, those types of names have been struggling, which is evident in the charts. You can see the Qs have been doing really well as big cap tech and growth have done pretty nicely over the last month. The Dow type of names have struggled a little bit more so, and you see that in the Dow, you see that in IWM as oil and financials have struggled. IWM not looking great here, about 2% below the 50, 2.5% below the 21. Just been a choppy year for small caps, and that is why we moved that arrow to yellow, because this is not the most constructive look here for IWM, and then MDY is going to look almost the same here. Pretty similar, about 2.5% below the 50, 1.5 below the 21. Was not able to reclaim or really stay above these moving averages here with much conviction. It's not the best action for those two indices. The Dow looks okay. Q's obviously the strongest, the S&P right there behind the Qs as far as the 5 major ones we look at every day. I mentioned rates fell. Let's take a look at that, because I've been talking about this for a while. I actually in a couple of weeks ago mentioned that I thought it was likely that TLT would run up into this 200-day, and conversely TNX, which is your 10-year yield, would probably go to its 200-day, which has actually happened. But the speed of which it is happening, I think, has given the markets a little bit of pause or concern. And basically what you've got is you've got yields stretched to the downside, and you've got bond prices stretched to the upside. And that cooled off a little bit today. TLT was up about 1% pre-market. It kind of came back in. But a very rapid move in yields or bond prices tends to scare the markets a bit, regardless of which direction it's in. But for the overall theme, lower yields and higher bond prices has been good for growth stocks, good for tech stocks. We'll see if that trend continues as these TLT is continuing its move higher. It's probably due for a rest at some point. It's a bit extended here for a stock of this nature or a price of this nature. But just something to keep an eye on. How does that relationship play out as this progresses here? Do we see a little bit of a reversion to the mean on both of these? Lastly, actually that wraps it up. Let's go ahead and get into some charts. Let's get into some new trades we made today. First, Chipotle, one of the first to show strength this morning. You can see right here at the pivot, ran up to almost to all-time highs, came back and tested the 8-day exponential and bounced off of it absolutely beautifully. We started a position in Grotection on this one today, and you can see the strong bounce here as it consolidated here right around 1550 to 1560 and shot up right there right around to 1590, holding up nicely and not giving much back. And you can see what drew our attention to Chipotle. Look at the way this RS line is trending here. That is reminiscent of what NVIDIA's RS line looked like in the early days when it was breaking out net. You want to see that 90-degree angle. That's a big time sign of strength, especially when you look at other restaurants. No one has an RS line shaping up quite like this one in the restaurant industry. Another new position, Amazon. We bought this one today. Obviously, you can see incredible strength, incredible volume in a very, very big stock. Hard to ignore that, and that's ultimately, a lot of what led to the decision. Is you can't ignore a move like this in a stock this big, neither on a price basis or a volume basis. And you've got both of those. You've got a breakout and certainly showing extreme relative strength today on a day when the market was down. You got Amazon up 1%. And Roku, the last of the buys, we bought this one today. It was one of the first to really show strength this morning. I'll show you a 5-minute here. Ran all the way down and almost touched the 21-day, which is going to be right around 404, and came all the way back up and went green. One of the first stocks to go green this morning in growth land as well. We had gotten shaken out of this one back around in the 430s, the low 430s, added it back today on this nice strength. And you can see didn't quite get to the 21 EMA, but it did bounce, wasn't able to get over the 8-day, but it was one of the few that was able to go green today. A couple more strong names here. Net, one of those names that was able to go green, very similar to Roku in the fact that it almost got to the 21 and bounced. But the really important thing I want to focus on here is you see how we bounced on the 21 essentially and blew through the 8-day and reclaimed it. That is the #1 sign of strength I would look for in a leading stock on a down day. If it can undercut the 8 or whether it's the 21 and break through these levels and then ultimately reclaim it with significant power, like you see here, just not even remotely struggling to get through the 8-day. On the other hand, if you look at like Roku, which this is a really strong bounce off the 21, it just couldn't quite get through the 8. But net just blows through it. That's something you want to take notice of. When something bounces off the 21 and reclaims the 8 in the same day, especially if that's a down day, that's an important sign of strength that you want to take notice of. DocuSign also really strong today. Never even got close to the 21, but undercut the 8-day and reclaimed it. It was green for the majority of the second half of the day, basically finished flat. Which, by the way, DocuNet, both of those are positions in Grotection. Another strong name, I initiated a position on this in the beta test portfolio today. Celsius, as it reclaimed this 21 EMA. Another one of those that was one of the first ones to go green this morning, show some strength. Carvana, which is not owned by anybody at the current junction, holding up really well considering it's right here at all-time highs, very, very close to this 323 level. Undercut the 8 just slightly, reclaimed it, closed at the top of the range. That's actually going to be, I think, a new closing high for Carvana ever. You can see it touched 323 on this day here, but it closed at 314. So a new closing high for Carvana. And last one that didn't go green, but one that's very, very strong. PayPal, this is also owned in Grotection, undercut the 8 EMA, reclaimed it, looking a lot better than its friend Square. Square, a little bit more of a struggle, undercut the 21, wasn't quite able to get back above it. In my beta test portfolio, I actually sold Square and swapped it for PayPal, strictly based on the strength. PayPal was down less today. Just in general, at kind of at the peak of things being down a decent bit earlier this morning, PayPal was only down about 2%, whereas Square was down 4 or 5%. So I just made the decision to move on and go with the strongest name there. Some names we got, or a name we got shaken out of today and sold. Lennar, we bought this yesterday, just not acting well. Builders in general, I'll show you ITB. This is one of the leading reasons here. ITB, just getting rejected and not acting like it should. So we cut it, move on, very small loss. But just home builders having a tough time getting it going. And I'm going to go through a handful of the weak sectors here. Here's DHI, which looks very similar to ITB. This is one of the big home builder names. Just not looking good today. Most were down anywhere from 3 to 5%, along with the indices as well. NVIDIA, we trimmed a little bit of this one strictly because this first closed below the 8-day exponential moving average. We had some really nice profits. It's extended. So we trimmed a little bit of NVIDIA today, still holding a core position in Grotection, however. And then for a couple of weak names here, XME, although it climbed back, still one of the weakest sectors in the market today. This is your metals and mining. FCX, also really weak, just still not able to get anything really going, down 4%. NUE, this is one of the leading steel stocks, excuse me, down 2%. Even, gold and silver miners had a rough day, down 2.5%. Silver miners going to be very similar, down 2.3% for silver miners. Shopify, which I do own in the beta test portfolio, not really showing the action that I want it to. There's nothing wrong with it. This isn't the most encouraging candle there. It did not break out and continue as it should, and didn't hold up on the 8-day. I would be watching this 21 EMA level if it can get there, and how it acts around there, personally for Shop. XLI, one of the weaker sectors today as well, down 1.4%. You can see struggling to just get back over these moving averages. It's a recurring theme with a lot of these value type of sectors. XLE and XOP both breaking down a little bit. You can see XLE below the 2150 and the 8. XOP back above the 50 slightly. Actually looks a lot better because it's got some names like Matador, which is one of the strongest names in the oil and gas land today, acting pretty well. And lastly, banks struggling, as you would expect, with yields falling, pretty much looking similar to yields here. Not really able to get anything going, down 2%, one of the weakest areas in the market. Last thing here, this is a bonus stock for you. Not to steal Alex's thunder here, but OSTK, when I was looking at today, I believe they got an upgrade from Needham. I just saw the volume, I saw the price action today, getting back above the 21 and the 8. I do not have a position, but one that I'm watching closely, and one that's actually actionable here. It's you can see the numbers are pretty nice, the revenue growth, the EPS growth, etc. It's not a super lofty valuation company, as you can see here with the PE, but just a reasonable entry here off the with the 21 and the 8. You can size your stop how you would like, but I mean, you're literally sitting 0.5% above the 21 and 0.2% above the 8. Just something to think about here as a stock that's been trending higher. You can see the RS line has been trending higher as well. Took a little bit of a hit as it ran into 100. And you guys can't see it, but there's actually a downtrend line where there's a high back here on 128. Maybe if I pull it up on a weekly, you can. Yeah, 128 is the high right here. If it can get through that 100 level, that would basically break the downtrend line. So just a smaller stock that I noticed this morning when I was running some scans, one you can keep an eye on. So that is going to wrap up the video today, everybody. Thank you for listening. If you have any questions, comments, anything, please send me an email, hunter@revereasset.com. If not, I will see you guys on the podcast this weekend. Have a good one.